it is time to kill those bee noises. Not the bees, we're not killing the bees, but it's time to kill the bee noises. Bring a little bit actual buzz back in here. I think that we're gonna have to put some music in between things because there was a lot of energy here about 5 minutes ago, and now you all look like you're half asleep. So, we're gonna bring a conversation to wake you back up. Kristen Scholler, who is just up here and who will absolutely get some energy into the place, will be having a conversation asking, I would assume, the hard questions, knowing her, with the CEO of ING, my friend Steve, which is fun to say. My friend Steven, the CEO of ING. That's not a sentence I thought I was going to say in my life, Steven. We're going to dive deep on the future of sustainable finance. We're going to go a whole bunch of different directions, but the most exciting part is that it's Kristen and Steven, two wonderful humans that you're going to get to learn from, that I've already learned a lot from in like 3 minutes backstage. So come on over, folks. I'm going to yell a little bit more. Again, CEO of ING and Kristen Scholler from NYSE, about to dive deep. Let's bring them out. Round of applause for them, folks.
All right, good morning, everyone. In from America, so honored to be here on stage at Money 2020 with a local. Would you consider yourself a local, Steven?
I am. I used to live here for a number of years. I now live 5 kilometers down the road. The head office is 5 kilometers down the road, so yeah, I'm a local.
Amazing. Steven van Rijswijk, he's the CEO of ING, publicly traded company, largest lender in the Netherlands, and runs its sustainability division as well. So an incredible conversation to have to kick off the first day of Money 2020 Europe, including on this beautiful stage. It just feels like your natural habitat.
I've been here before, and by the way, it looks fantastic with all the plants and the trees. It's just amazingly done.
It does look amazing indeed. So a little bit different maybe than some office environments. And Steven, to that end, let's dive right in and get a state of play in terms of where ING stands right now when it comes to sustainability in banking.
Yeah, look, we consider ourselves a leader in sustainability. We have been following the Paris Agreement already since 2018. So we're driven by science. We follow the science path, the sectoral path to the 1.5 degrees, so the strictest path there is. And all we do is focus on 3 things. First of all is to drive down emissions. So to help customers to change their processes in their factories or in their businesses to drive it down, also by, for example, the help of solar panels. The second thing is that we help to finance moving companies to a greener economy. And that means, for example, helping big companies changing their ovens from coal ovens to, let's say, hydrogen ovens, or to finance wind energy or solar energy or hydrogen energy plants. And last but not least is to try to get everybody along, since we have about 40 million retail customers. And it's not only the big corporates that we want to get along, but also to help retail customers to get by as well. And we finance about 350 billion worth of mortgages, and means we need to help those customers in refinancing their mortgages or make sure that their homes are getting more green by either using our solar panels or heat pumps or double glazing, so make them more heat or cold prone. Now that takes money, but it's also not easy for them because you can have subsidies. You need to go to certain people who help you install all these things. And so guide them through a journey while really making their houses more sustainable is important as well. And that's why we want to take everybody along. And the last element in that path, and it's also about taking everybody along, is that we need guidance from government. So we need clear glide paths, or we need clear incentives for people to move. And let me take you one example, that is the steel industry, for example. If you want to move away from coke and coal fired power plants to hydrogen, for example, green hydrogen plants, then you need sunset dates. You need sunset dates for all the sector to move at the same time, because the steel price is set by the market, and therefore these steel companies can't do it by themselves. So we also need government intervention to make sure that these industries can move at the same time. Now that's what we do. Drive down, help the finance, and get everybody along.
On the point of government intervention, Stephen, I'd be curious to hear from you what exactly you want to see from those bodies that's going to take European banking as a whole, including ING, to the next level when it comes to sustainability.
Yeah, and thank you. And I've been talking about it quite a lot also in Brussels with the Commissioner for Sustainability. This is about, and we also now see that coming along in not only what was in the past called the Green Deal, but is now much more called the Clean Deal. That's about the real industry. That's not necessarily about the banks, but it is about how to drive sectors to move them to the next level of sustainability and towards that Paris Agreement. And it actually means that you need to make sure you get to agreements with sectors as a whole, whether it's the steel sector, it's the cement sector, it's the aluminium sector, it's the oil and gas sector. You need to make sure you either put incentives in place, so give them subsidies, for example, or make sure you get CO2 pricing in there so that people can trade CO2 emission certificates, or make sure you set guidelines for when they need to move to greener solutions so that everybody can move at the same time. And if the EU can help to drive that for the real industry, then it will also become easier for banks to finance, because then the business cases become easier as well. I mean, in the end, we are living in an economic world. These companies need to be able to drive their businesses, and if they can drive their business as well, then also we can help them by financing their moves towards more sustainable processes.
Major investments.
Major investments, trillions.
Yes.
Yeah.
Of course, guided by the Paris Accords, as you referenced earlier. As the head of the sustainability division at ING, of course, in addition to running the company, how is it paying off for your business and the sector?
Well, I mean, we have a head of sustainability, but I'm heading the head of sustainability. So, but I find it very important. I mean, look, we are a big business with about 750 billion in lending. And many of those loans go to processes in corporates that still need to make a move. So in that sense, it is part of our business. It's part of our clients' business. And we are currently this year already providing a target of 130 billion sustainable finance mobilized per annum. And we want to move it to 150 billion by 2027. So those are quite big amounts. Then we have many hundreds of thousands of clients that do mortgages with us, and we also want to move those mortgages. So it's in the heart of our business, it's in the heart of our client business. So for us, it's both the right thing to do, because I mean, in the end, climate threat is real and we need to act. But it's also a business case because it's also important that we really get the business to move in the economic constructs that are in. So yeah, it's at the heart of our business.
We're talking about sustainability at the same time that probably the buzziest term out there is artificial intelligence.
Yeah.
And the power that it takes to use AI, of course, for good. So how do you balance those two when making these decisions at the top?
Well, look, AI is also there to make the lives of customers a lot easier. And of course, we need to think about the energy consumption as well. And that is, of course, part and parcel of the sustainability approach. But AI can, in the end, banking is a derived good. No one goes out of bed and says, oh, today I'm going to make a fantastic payment, or I'm going to do a great loan documentation, I'm going to smell the paper of the loan. It's about the business that they're doing. And therefore, it is also for us to make sure that we make their business frictionless. And AI can help a lot with that. Now, and we do that in different parts. It's about onboarding clients in an easier way. It's about making lending frictionless. It's about personalized marketing. It's about the contact centers, how we have 30 million contact center calls a year. And they don't call us because they like us so much. They call us because they want the problem to be taken out of the way. And that's how we use AI. And that makes banking a lot easier. Spend less time, make sure that costs can go down, make sure that people can spend more time somewhere else, and get the solutions more integrated as well.
What excites you most, Stephen, when it comes to financial technology? That's going to be the big theme, obviously, here at Money 2020 Europe. AI is very much a part of that. Your company, ING, using AI, it sounds like, at an increasing speed. Where do you see this going with the technologies out there?
Yeah, look, I mean, Gen AI is a very big next step. We use already AI for many years, but now we use also Gen AI in our contact centers. We've rolled it out in the Netherlands and Spain. basically that basically improved the chatbot quality enormously. So where you in the past saw that even with chatbots, that the human interface sometimes scored higher depending on the journey than was the case with AI. Now you see Gen AI really taking over, and there we see higher scores than the human interaction. Not on all journeys, so not on the more bespoke journeys like inheritance, for example, but on the basic journeys like onboarding, for example, or how can I unlock my credit card, or how can I use my credit card. You see there that Gen AI is actually better than AI, but also better than human interaction. So that for me is fantastic.
I think a lot of people in this audience are probably very, very familiar with AI technology, whether that's on a personal use case or certainly a business use case. Here, AI, a key part and way for businesses to stay competitive. And so when you think about your strategy, leading ING in Europe, and of course your presence really around the world, looking forward, how does AI factor into your overall drive to stay competitive? What other factors go into that too?
Next to AI, you mean?
Yes.
Well, in the end, it's about making banking frictionless, right? And if we look at a mortgage journey, still a lot of paper is being moved around. And we use what we call straight-through processing a lot to make sure it's all digital. We take the least amount of steps. You can do it in a matter of minutes. Get the underwriting done online, real time. But not only in mortgages, it also goes for the payments that we do. We are the third biggest payment provider in Europe. We have over 10 billion payments per annum. We are a very strong financial markets house in Europe and beyond. And so all of these journeys, and we actually have 350 journeys that we specify to say, okay, here do we need to take friction out, and we need to do it all digital. Now, that is not to say that we only need to be digital, because it also could be that sometimes a customer wants interaction. And let me take Spain, for example. Many times when people take a mortgage, in part of the process, they want to speak to somebody to look at what they filled in digitally. And of course, then we also provide call center service or remote sales, or we provide a branch. But if it is better for the customer to do it all digital, then we will do it digital, and that will make us so competitive, because in the end, that also means customers appreciate you more. We are in 5 of our 10 retail markets, we have the highest net promoter score, so that means that people like what we do. And that also means that people are going to do more business with you. So if we can provide a frictionless, superior service, then it also means that people want to come back and they do more business with you, and in the end, that helps us to grow what we call our primary customer base. We have about 40 million customers, but about 15 million of them are primary customers, and those are customers that do 3 products or more with you, and those are customers that are typically more sticky. So digital sits in the center. We also say in retail it's digital only, mobile first. It really depends on the customer segment, because if you're a wholesale banking customer, a commercial banking customer, you want human interaction. So we tailor it, the digital part there where the customer wants digital, so digital first, and human interaction where needed, and that makes us competitive.
Are you looking at any companies that might help you, Stephen, reach those goals? Some companies that may or may not be in the audience, if that is part of your strategy when it comes to consolidating banking in Europe.
Well, first of all, when it comes to, let's say, fintechs or big techs, of course, we work already a lot with fintechs and with big techs. Big techs are both clients of ours and are partners of ours in providing, for example, parts of our cloud environment, although we also have an internal cloud. Fintechs that can also help to drive that experience with customers. Let me give you one example. In Germany, we are the third biggest provider of mortgages. We have a mortgage book of about 100 billion. But part of getting a mortgage is also doing an appraisal of the value of the house. And there we work together with a company that flies around drones that can do appraisals real time of that area, so that the customer doesn't need to fill in, or they don't need to get to a real estate broker to get to plan in a visit. It can be done straight away, because based on the location, the measurements of the house, you can get a appraising done instantly straight away. So that's how we work amongst others with fintechs. Now when it comes to ING, we are a very good company, big company, 40 million customers, 35 countries where we're present, about 100 where we do business. But we also need to make sure that we become more relevant and more impactful in the countries in which we operate. And so how do we do that? That is different for different market segments. In retail, we want to become more bespoke when it comes to offering services to, for example, Gen Z or mass affluent or expats. And that means that you need to tailor the way that you offer your service to those particular segments. We also want to, what we call, fill in the white spots. In some countries we do have private banking, we do have business banking, we do have consumer lending. But in other countries where we're active, we don't have that yet. So we have a very good private individual franchise with 10 million customers in Germany, but no business banking, limited consumer lending, no private banking, no wealth management. So we fill in the white spots there where we don't yet have them. And in retail, the third thing we do is that we fill in a pillar that we can still fill out, because we have private individuals and business banking, but we don't yet have private banking and investment propositions as a full third pillar in private banking and in the retail side. And in wholesale banking, we need to continue to invest and in the payment side. So we need to deepen our payment capabilities in a number of countries. We're very deep in Belgium, we're deep in the Netherlands, we're deep in Poland, but we're not so deep in Germany or Spain as yet, or Australia. So we need to really deepen those payment capabilities. And in financial markets, it's just about broadening the products that we sell to our clients with more precise pricing. And the pricing goes into nanoseconds and decimal points, so you need to be very precise to actually win the trade when we have those trades. So that's more about investing in product capabilities. Now, what does that mean for M&A? Because that was your question. In the end, it basically means that if we can accelerate the growth that we currently have, so fill in some of the white spots that we have in some of the markets, especially in retail, in markets like Germany or in Poland or in Italy or Spain, then we will for sure look at it. So we have very good autonomous growth. But if there is something that can accelerate that growth, and if that fits well with our culture of being a digital bank, and also fills in, let's say, more of our fee business that we want to do, then we're looking at it.
Okay. Those seem like they might be active considerations in terms of, yes, very active, in terms of what you're looking at. I'm from the New York Stock Exchange. ING is listed on the New York Stock Exchange. We like to tout that way back in New York. And one thing that we've seen certainly this year is change in America at least, right? More disruption, certainly multiple days of record trading volume on the floor of the New York Stock Exchange as trade policies are being updated by the White House and President Donald Trump in America on a real-time basis. How is that changing your strategy, if it is, or how are you responding to those changes at ING?
Yeah, I mean, look, the tariffs are such, and if you look at the global economy, in principle, tariffs are causing friction in the global economy. And in that sense, especially long term, friction is not good for global trade. And therefore, tariffs in that sense do not help with that. But that's a political decision that is being made, so we need to deal with that. Now, if you look at the direct impacts, and we are a bank that is largely based in Europe. Of course, we also have our operations in the US, we have our operation in Asia and Australia, but 75% to 80% of our operations sit in Europe, although we support our customers globally, right? Now, if you look at the European export to the US, often it's not more than a couple of percent points of GDP. And as a result of which it means that if you look at, let's say, a 10% tariff, the direct impact based on limiting exports that has on the European economy is less than 0.5%. Not good, but it's also not something that we cannot overcome. What is more important is to assess what is the indirect effect of that, and everybody calls it uncertainty. And uncertainty is very hard to directly price into the financial markets. There's lower consumer confidence, there's lower producer confidence, and it really depends. It could mean that companies hold back their investments. We see that a little bit in our wholesale bank, our bank for big companies, whereby they are less investing, lending a little bit less, so we are stabilizing there a little bit. It will come back, but at this point in the beginning, people are always a bit nervous, and then they pause for a little bit. And where you also may see effect is companies who have dispersed supply chains. If you make a car as in automotive, for example, and you make the tire here and the glass panel somewhere else and the engine somewhere else, and you move from country to country, you get to deal with a number of these import tariffs, and therefore you see countries or businesses that have dispersed supply chains. For them it is more difficult. Now, at the same time, a limited direct impact on the European economy. More than half of our book, like I said, is mortgages, 350 billion. There you see quite a bit of growth. There is still quite a bit. We are one of the biggest mortgage providers in Europe. You see in the many countries in which we operate, there is a need for new houses. There's a shortage of houses. There is low unemployment levels. There is reasonable economic growth. And therefore you do see a big need for mortgages in countries like Spain or Poland or the Netherlands or Belgium or Germany. And you see that because of the low unemployment levels, the economic setting is good for mortgage growth. So there we see growth. As I just said, we want to diversify ourselves in different parts of the economies in Europe to be more relevant and more impactful. And there we see good growth as well. So I look very positive to the future, positive to our growth. And of course, we need to stay very close to our customers that have to deal with these supply chain challenges as a result of these import tariffs. But that's what we're doing.
Yeah, I do want to talk more about the customer because you've mentioned here, Stephen, just how crucial the mortgage element of your business is, and of course where you see growth opportunities, including with the consumers and demographics like Gen Z ahead. In this environment, are you finding that the appetite for loans has changed, and how do you step in to fill any questions that your clients might have?
Well, I mean, what we do see, I mean, we just already talked about the mortgages there, of course, and depending on the market, you see that for starters, it is not always easy to buy a home because you see that the house prices over the last, especially decade, moved up quite a lot. You do see that many people, I talked about sustainability, want to make their homes and lives more sustainable, but in reality, their first concern is, let's say, the economic welfare. Can I pay my rent? Am I able to put my kids to school? Am I get my kids to college? Do I save some money for a rainy day? And so they have an interest in sustainability, but if we do the polls, it almost comes at number 10 or 15, not at number 1 through 5. So what we need to make sure of is that we need to make it economically viable for these people to actually make their homes more sustainable, and therefore think of financing schemes so that they can see that from a liquidity and return point of view, it's better to have a more sustainable home. Only based on, let's say, moral superiority, it will be difficult because people are just busy with their daily lives. I think last but not least, and that is different a little bit in Europe than we see in the US. In the US, people are used to invest quite a bit. So if they have money aside, they keep part in savings, part of investments. In Europe, there is much more of a savings culture. And there is, of course, nothing wrong with savings. We have a 650 billion savings book. But if we want to stimulate the economy, we also need to make sure that people invest. Invest in companies, invest in SMEs. And by the way, it also, of course, with more risk, but can get people higher returns. And therefore, making sure their money also grows further in their lives. But helping people to invest and helping people to invest safely. Also from small amounts, not only the big private banking clients that we have, but also people, everybody who just earns a living, that they are also able to take care of themselves for the future and help them invest, also with small amounts, is very important and comes much more front to mind now than in the past where governments were able to take care of people. This is not longer possible, also not in Europe, and that's where banks need to step in.
Stephen, as we look to round out our chat here on stage, many innovators are in the audience, and of course they'll be here at the show over the course of the next few days, of course, in your home turf.
Of course.
Of course. And ING started as an innovative company. It's grown into now the Netherlands' largest lender. What can you share about the journey that ING went on and the role that the bank will play in the future of money and financial transactions?
Yeah. Well, look, it's funny because I mean, how we talk a lot about neobanks these days, and some of these neobanks do very well. But ING actually 25 years ago was a neobank. We started ING Direct in many countries, which was in the beginning a telephone bank. It came actually from this country, which was what we called a post bank, but the post bank was a bank that had no branches, and clients called in to open accounts. Now that calling in became a digital bank, but it actually meant that we were basically causing disruption and challenging the status quo in many countries where we are now active as one of the bigger banks. So in Germany, we start out as a very small bank. We have now 10 million clients. In Spain, we started a direct bank. We have now 4 million clients. The same goes for Australia as example. So we have been challenging the status quo continuously. We've always believed that banking is a commodity. Many of those products are the same. No one really wants to deal with these products for a long time. They just want banking to be very easy, frictionless, personal. So what we continue to do, and we're still a challenger, and we also challenge ourselves, is to look for innovations, for digitalization, to make that experience different, to make it superior, because that is the difference that you can make for a client. It's not in a product, it sits in the way that clients experience their interaction with you, and that's what we're good at, and that's what we will continue to do.
All right, we almost nailed it to the dot. 5 seconds left, just enough time for me to thank you. Steven van Rijswijk, he's the CEO of ING, the Netherlands' largest lender, kicking things off today at the first day here of Money 2020 Europe. Steven, thank you so much.
Thank you, Kristen.
Thank you.